Well, so that's essentially the list of stocks coming up in just a bit. Mark Matthews is with Bank Julius Baer and Companies with us. Mark, great to have you with us here on the program. Thanks very much. So is the market starting to doubt the soft landing? I mean, it's just sort of one or two data points on the labor market side, but really soft. What did you make of it and the market reaction then?
I agree with what you just said, Prashant. It's just one or two data points. It's hardly enough to tell us that a recession is coming. Now, I would say that there have been so many recessions forecast by economists that didn't end up happening, and many recessions that they did not forecast that did end up happening. So it is hard to predict recessions. It's hard to predict their timing. And we know that in a capitalist economy, they do happen. But I think we're many, many months away from a recession, in fact, a few years. And the data point that was most seized on, the initial jobless claims, it's a weekly number. It's a very noisy and volatile number. I think really when the market is going down, people just look for excuses and they latch on to anything that looks bad.
Mark, hi, good morning and good to see you as always. Your thoughts on the Indian markets, because it's been, such a great opportunity for investors the last many weeks and months. If there is a fall in global markets and it takes India with it, would this continue to be a buy on dips market?
Well, yes, but I mean, a dip, whatever you qualify a dip by, I would say at least 10%. So a pullback is, let's say, between, let's say, 5%, and then a correction would be 10%, and a bear market is anything more than 20. I would be a buyer in that territory between 10 and 20% below where we are now. Because if you think back to 2022, when the S&P fell almost 20%, the Nifty was basically flat, and there are not many foreigners invested in India. So the dynamics that took India down so much, for example, in 2008, the global financial crisis, were really where foreigners had heavily overweighted India going into the global financial crisis. They're not very present in the Indian market today. I don't think, therefore, that they should be big net sellers of the market. There's just not enough of them to make a difference. And locals should, I think, be still quite constructive on the market, given the earnings growth will be in the low double digits this year and probably for the next 2 years after as well.
Hi, Mark. Good morning. What about the toss-up between India and China? China showed signs that it was coming back. But again, those data points are looking extremely weak. And, whatever the government is doing, whatever the banks as well as doing out there, the economic data is still not showing up. The toss-up between the two, would you still lean towards India versus China, irrespective of those valuations?
Well, they're polar opposites in the sense that India is a growth market, China is a value market. China used to be a growth market 10 years ago. There were all kinds of exciting up-and-coming companies, technology-related, growing their revenues and their profits in the 20 to 30% per year kind of range. That's all gone since common prosperity was enacted a few years ago. And so what China is today, in my mind, it's an undervalued market. It's being priced as if it has no growth. In fact, the earnings growth for China this year will be in the high single digits, somewhere like 7 or 8, 9%. But it's the old stalwarts that are, kind of driving the market. And what I mean by that is state-owned enterprises, just big, old-fashioned companies, not exciting new growth companies, which I think exist in India.
Got that, Mark. By the way, I don't know if you have a view, but I was just reading that predicted the betting a betting website is now predicting Democrats to win in November. It was looking, just a couple of weeks back, it was looking like Donald Trump was cruising to a comfortable win. And that's how fast things can change, right? So that's politics. But I think the lesson applies in markets as well. Any thoughts?
Yes, I think Predictit is the most reliable of the betting websites because they only accept small bets. With the other ones that are for profit, you can go in with $100,000 and really skew the odds on some of these events. Predictit, there's tens of thousands of people making small bets, so it's a better barometer, I think, of what sentiment is. The thing is that it's a barometer of the popular vote, and as you know, in America, who gets in the White House depends on the electoral vote. And the person who's got the best record for forecasting that is a fellow named Nate Silver. And his model, which is very complicated, but I mean, he got everything right except 2016. And even in 2016, he gave Trump the highest odds out of any pollster. But he's still saying that Trump is far ahead in the electoral vote. I wouldn't say it's impossible that the Democrats could be in the White House, but I think if they are, the Republicans will retain control of the House of Representatives, which is the legislature. What it will mean is that on top of not extending the Trump tax cuts, a Harris administration would not be able to spend much because the Republicans always become deficit hawks whenever there's a Democrat in the White House. So that would be material. I think it would probably actually be bullish for treasuries. But for now, our base case is still that the Republicans will win the electoral vote, so they'll get in the White House and they will retain the House of Representatives and they might even get the Senate.
All right, Mark, we'll let you go on that note. Thanks a lot for joining in. Appreciate your time here on CNBC TV 18.